This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Throughout the history of Wall Street, countless statistical records have been set and subsequently broken. But there is one specific financial phenomenon that continues to shake the very foundation of market architecture to this day. Imagine allocating an initial capital base of just over $10,000 and systematically managing that equity until it scales into a massive. Dan Zanger is known for a widely discussed historical trading case study involving exceptional reported returns. This is not standard portfolio growth. According to documented records, this represents a staggering. These historical results were exceptional and are not representative of typical trading outcomes. Return generated in less than 2 years. It is a mathematical scale of compounding that retail investors and even elite institutional portfolio managers cannot even begin to comprehend. The architect behind this historic financial transformation was not born into Wall Street royalty. He does not hold an advanced degree in quantitative finance from a prestigious university. The man who engineered this phenomenon is Dan Zanger. Before he was universally recognized as a capital market legend, his primary profession was completely disconnected from the financial sector. He was an independent pool contractor in Beverly Hills, relying on grueling physical labor to sustain his livelihood day by day. Outsiders often rush to the conclusion that a world record return of this magnitude is simply the byproduct of a chaotic, anomalous market condition. But in the realm of high-level finance, generating $42 million is never executed by accident. Dan Zanger developed a framework for interpreting market behavior. He meticulously analyzed historical data to construct a razor-sharp strategic blueprint, a precise methodology designed specifically to track and identify market conditions that some traders associate with increased market participation. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. In this episode, we are going to decode the trading architecture that Dan Zanger is known for. A widely discussed historical trading case study involving exceptional reported returns. This is decoding the $42 million Dan Zanger's trading strategy. Let's open the blueprint. To truly comprehend the sheer magnitude of Dan Zanger's $42 million transformation, we must first examine the environment where his architectural blueprint was initially drafted. During the 1990s, Zanger spent his days in Beverly Hills, California. However, he was not there as a wealthy resident or a corporate executive. He operated as an independent pool contractor. Every single day, he was surrounded by the immense, visible wealth of the elite. Yet his own reality consisted of grueling manual labor under the relentless sun. He was physically trading his energy and time for a linear income. But internally, he possessed an insatiable hunger to completely restructure his financial trajectory. Zanger absolutely refused to accept that manual labor was the ceiling of his operational potential. He knew that to change his output, he had to completely overhaul his input. So when the sun went down and his physical labor concluded, his true intellectual engineering began. He transformed into the night owl architect. Every single night, dedicating 6 to 10 hours after an exhausting workday, he isolated himself to study the financial markets. He did not seek out shortcuts or easy systems. Instead, he meticulously analyzed thousands upon thousands of historical stock charts. Utilizing the foundational concepts of market legend William O'Neill, Zanger executed a rigorous process of reverse engineering. He dissected the historical data of the market's greatest performing assets. He stared at these visual data points for years, training his cognitive recognition until the chaotic movements of stock prices stopped looking like random fluctuations. His eyes began to clearly identify the hidden geometric structures deeply embedded within the price action. Through this exhaustive period of relentless data analysis, Zanger arrived at a profound operational realization. He finally understood the fundamental mathematics of wealth creation. Massive, exponential capital is never generated by trading physical time for an hourly wage. Through this exhaustive period of relentless data analysis, Zanger arrived at a profound operational realization. He finally understood the fundamental mathematics of wealth creation. Massive exponential capital is never generated by trading physical time for an hourly wage. True wealth is strictly generated by possessing a highly calibrated strategy. He realized that these geometric chart structures were the patterns that some traders interpret as potential institutional activity. His objective was no longer to work harder with his hands. His ultimate goal was to deploy a precise strategic blueprint to systematically intercept and capture these massive institutional capital flows right as they began to accelerate. The physical laborer had officially evolved into a strategic market architect ready to decode the geometry of price. To systematically intercept the massive capital flows of Wall Street institutions, Dan Zanger required a highly precise operational mechanism. He discovered this mechanism within the architectural geometry of price action. His $42 million blueprint is entirely built upon a mastery of chart pattern recognition. However, to Zanger, these patterns are not just arbitrary lines or subjective drawings on a screen. He strictly views them as objective psychological maps. They are the visual mathematical footprints left behind when massive institutional funds quietly accumulate inventory. To execute his strategy, Zanger focuses deeply on three primary geometric structures. The first and perhaps most powerful structure in his arsenal is the cup and handle. Zanger does not view this pattern as a simple shape. He views it as a systematic institutional shakeout. The cup formation represents a brutal period where some traders interpret the pattern as reflecting changing market participation during a market decline. As the weak hands liquidate their inventory, some analysts believe larger market participants may become active during such periods. But the true strategic entry lies in the handle. The handle is a period of extreme price compression, right near the peak of the resistance line. During this precise moment, the market goes completely quiet. Price volatility shrinks, and selling pressure completely dries up. This geometric contraction is the some traders interpret the pattern as indicating reduced selling pressure by institutional accumulation. The second structure he heavily relies on is the flat base. This pattern occurs when an asset has already experienced a significant upward surge, but instead of aggressively pulling back, the price consolidates in a tight horizontal channel. In Zanger's strategic framework, a flat base is a display of extreme underlying strength. It may be interpreted by some traders as a period of market consolidation. They are actively absorbing any profit-taking from early buyers, refusing to let the price drop and preparing their capital for the next aggressive markup phase. The third structure is the bull flag, which operates as a high-speed structural pause within an explosive uptrend. It represents a brief controlled period of market digestion where some traders interpret this pattern as indicating continued buying interest, a minor wave of retail selling before the primary trajectory resumes. In Dan Zanger's operational blueprint, understanding these geometric shapes is the ultimate key to market timing. He never acquires an asset when it is extended or structurally chaotic. He patiently waits for the precise moment when the price action tightly compresses into the apex of these specific patterns. When the geometry is mathematically perfect and the supply is fully depleted, some traders monitor such conditions for potential future price movements, and it is at that exact fraction of a second, when institutional demand fractures the resistance line, that Zanger executes his strategy, aggressively deploying his capital to ride the institutional momentum. Within Dan Zanger's strategic trading architecture, discovering a mathematically perfect geometric structure, such as a cup and handle or a flat base, represents only 50% of the operational equation. To Zanger, a chart pattern that Dan Zanger considered significant on a monitor is fundamentally meaningless and entirely devoid of kinetic energy if it lacks the ultimate deciding variable, trading volume. In his strategic blueprint, Zanger compares these geometric chart patterns to the engine of an elite, meticulously engineered supercar. No matter how perfectly that engine is constructed, it cannot generate forward momentum without premium, high-octane fuel. In the ecosystem of the financial markets, the only fuel powerful enough to drive an asset's price through historical resistance levels is massive, overwhelming trading volume. When the price of an asset finally breaks out from a prolonged period of geometric compression, Zanger rigorously audits the volume data. A price surge accompanied by trading volume that spikes hundreds of percent above its standard average is never a random, chaotic fluctuation. It is an additional factor considered within technical analysis. A volume surge of this staggering magnitude simply cannot be generated by the scattered, uncoordinated buying of retail investors. It is the undeniable statistical footprint proving that massive institutional capital, the heavyweight financial funds, are aggressively injecting liquidity to acquire the asset. It is the ultimate declaration that some analysts interpret this as evidence of stronger market participation. Dan Zanger considered the combination of chart patterns and volume analysis to be important factors within his trading methodology in Zanger's entire system. When these two variables perfectly align, they systematically filter out false breakouts and structural failures. In the exact fraction of a second, when this mathematical equation is fully confirmed, the architect does not hesitate. He confidently authorizes the execution of his strategy, aggressively deploying his capital with elite engineering precision, effectively positioning his portfolio to capture the undeniable momentum of Wall Street's largest institutions. When analyzing a staggering, these historical results were exceptional and are not representative of typical trading outcomes. Many outside observers incorrectly assume that engineering a staggering. These historical results were exceptional and are not representative of typical trading outcomes. Necessitates reckless, undisciplined risk exposure. They mistakenly believe that achieving such exponential growth requires blindly holding assets through extreme, uncontrolled volatility. However, the architectural reality of Dan Zanger's system is the exact opposite. He is not a reckless operator. He became known for his disciplined risk management approach. To truly understand the mechanics of his strategy and his détente protocol, we must analyze a historical case study from his legendary operational period between 1999 and 2000, the height of the dot-com technology boom. During this era, Zanger aggressively targeted market-leading technology assets. Let us reconstruct the exact strategic sequence of a classic Zanger operation. First, he would monitor a premium technology corporation as it formed a massive, multi-month, cup-and-handle geometric structure. He did not predict the movement. He waited for the mathematical confirmation. The precise moment the asset fractured its resistance line on record-breaking institutional volume, Zanger deployed his capital. The asset then entered a parabolic markup phase, riding the massive influx of institutional liquidity to generate hundreds of percent in profit over a matter of weeks. However, Zanger deeply understands the inherent structural vulnerability of operating within the high-speed velocity of momentum stocks. In March 2000, the macroeconomic environment violently shifted. institutional liquidity began to rapidly drain from the technology sector. When a sector bubble fractures, these high-growth equities do not experience a gentle, controlled pullback. They collapse with devastating speed and sheer violence. Enduring that kind of rapid depreciation without an ironclad defense mechanism would have instantly annihilated the $42 million he had engineered so meticulously. This is where his uncompromising defense protocol saved his empire. As the technology market topped and the asset's price action broke violently below its primary geometric trend line, amateur retail investors held on to their deteriorating inventory. They were paralyzed by emotional hope and historical bias, waiting for the price to recover. Zanger, however, executed his risk management sequence with zero hesitation. The exact moment the mathematical support failed and market selling activity increased significantly, he initiated a total liquidation sequence. He aggressively locked in his massive profits, converted his inventory back into cash flow, and completely exited the asset before it lost 80% of its valuation in the subsequent historical crash. He never argues with the market data, and he absolutely refuses to let his ego dictate his capital allocation. His entire operational mindset is dedicated to one singular, uncompromising objective: fiercely protecting the structural integrity of his wealth blueprint. The financial transformation of Dan Zanger, scaling a working-class income of roughly $10,000 into an audited, Dan Zanger is known for a widely discussed historical trading case study involving exceptional reported returns, is not a historical anomaly. It is frequently referenced as a notable historical example associated with his methodology. These historical results were exceptional and are not representative of typical trading outcomes. Return proved unequivocally that mastering geometric chart patterns and analyzing institutional trading volume is a highly effective operational reality. Decades have passed since his record-breaking run. Market algorithms have evolved and global economies have shifted, yet Zanger's strategic framework remains a timeless blueprint. It is a systematic architecture continues to be discussed by traders and market commentators to this very day. As we close the blueprint on this, Dan Zanger is known for a widely discussed historical trading case study involving exceptional reported returns. You must objectively audit your own financial operations. Are you still allocating your capital without a definitive strategy, completely ignoring the critical confirmation data of trading volume? Are you finally ready to decode the true mechanics of market success and consider how disciplined risk management principles may be incorporated into your own trading framework? Share your thoughts and your current strategic approach in the comments below. Let us know how you plan to integrate volume analysis into your operational framework. If you are prepared to elevate your trading from an amateur endeavor into an elite strategic business, your ultimate educational destination is the IUX website. IUX provides educational resources relating to financial markets to help you deeply study the precise geometry of chart patterns, decode the mechanics of volume analysis, and develop your own risk management framework to fiercely protect your capital. Before we conclude, we must emphasize a critical operational reality. Trading and investing in the financial markets involve a high degree of risk and may not be suitable for all individuals. The historical superperformance and world records discussed in this episode, including Dan Zanger's documented $42 million return, are exceptional and do not guarantee future results. Market conditions, regulations, and participant behavior have evolved significantly since the period when these returns were achieved. The material presented here is strictly for educational and informational purposes and should never be construed as direct financial or investment advice. We are not recommending or endorsing any specific trading strategy, investment vehicle, or broker. Always execute your own due diligence, consult with qualified financial professionals, and rigorously manage your capital risk with proper position sizing and stop-loss protocols. Thank you for joining us as we decoded the ultimate $42 million transformation. This has been Trader's Journey, a part of Trade Alive, brought to you by IUX Education. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Study the geometry, respect the volume, and goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade.